individuals. So before moving to that, if you want to get more idea about enrollment agent course and what are the parts in it, you can go through my first video. Now I'm starting with the federal income tax for the individuals. If any queries, please let me know. Okay. Coming to federal income tax, first, similar to income tax, I will show you the structure of the tax taxable income and tax credits and tax payment, so that you will come to know what is the structure and format we are going to use for the individuals. In US, the form we are going to submit for individual is form 1040. Okay, this will be in specific format. I will list on here one by one. First one, first we will take gross income. Gross income is consist of wages, salaries, interest income, or any business income as well. It's not like India. We have to show under different heads. One is like business income. Some head we have to show capital gains. Another head we have to show. If it is a salaries, we have to show it under another head of salaries and wages. That way we bifurcate. But in US, it's going to be like we will show all income under one category related to the individuals, that is gross income. We will combine and show it under one of the part, the first main item, that is gross income. I am going to, wherever it is possible, to correlate with the India income tax. I will give the example so that people who already know about income tax, they can easily connect to the US tax as well. So the first point is very simple. We have to show what are all the incomes we received for that particular year under gross income category. There is no bifurcation in this part. Okay. In gross income, we can adjust some of the expenditure which we paid to arrive at that income. So those can be adjusted. So we can make that as a deduction. So the second point for that is adjusted expenditure. So, what are the eligible expenditure? What comes under adjusted treatment? All those we will discuss separately in another lectures. But now I am giving you the specific format which we use for the form 1040. So, out of the gross income, we can reduce adjusted expenditure. Once we reduced adjusted expenditure, we will get adjusted gross income. We will get adjusted. Until this part, we call the line items as above line items deduction. So until this part, we will call the line items as above line item deductions. You can make a note of it. So once I arrive at adjusted gross income, I am going to take standard deduction as per law, or IR, itemized deduction. Anything can be possible. So out of the adjusted gross income, we can make a standard deduction. Similar, this standard deduction you can apply it as, once we arrive at gross income, after deductions and all, we will be getting net taxable income. In the net taxable income, we can get some deductions based on your age criteria in India. So if it is something like senior citizen, they will get standard deduction amount, some amount is more. Similar to that way, we can have also take here standard deduction. Otherwise we can get itemized deduction. So it's basically I can say it as medical bills. If you submit the medical bills, you can claim that amount. And charity expenses bills are based on the item wise, you can get the itemized deduction here. So this is also as simple as in our income tax, the standard deduction. We will get flat amount. Otherwise, we can go ahead with itemized deduction. So in both of the case, we can select only one option. We can't take two together. That is the main point. So the again to repeat, first gross income, thereafter adjusted expenditure. If we deduct that amount, we will come to know as adjusted gross income. So these line items, we will call it as above the line item deductions. So from this, we can take out standard deductions or itemized deductions. This is the format we have. So once you deduct these deductions, you will arrive at some amount. So that some amount, all these line items which we are talking now, we will call it as below line item deductions. Below the line deduction, above the line deduction. So we can get one more deduction, that is qualified business income. Qualified business income. There are few business which are qualified, so those incomes can be deducted from our gra- uh, adjusted gross income. So that's what here they are mentioning. We'll go one by one separately in our next lectures, but the format is here. So this qualified business income can be deducted after adjusted gross income and standard deductions. So that I am writing it here. So once we deduct all these things, we are going to get taxable income. What is my taxable income? I am going to get the final value to pay for the tax calculation as per that. So, gross income, adjusted expenditure, if you reduce, you will get adjusted gross income. From there, first you need to reduce standard deduction. Thereafter, you have to reduce qualified business income. Is it the same? Is there any confusion here? Yes. So the thing is, you can take standard deduction or itemized deduction. At the same time, you can take if you have any qualified business income deductions. This way, you can go ahead. I'm passing here. If anyone has doubts, you can ask me. And it's better to have a note as well in your book so that you can revise immediately for the next class. You can be well prepared. So you can make a note of it as well. Okay. Once we arrive at taxable income, how the tax calculations and how the structure of the tax is going to be, that I am going to explain now. So I'm writing it under taxable income. So now I know what is the amount is liable for the tax. From that, I will calculate what is my tax payable. What is my tax payable based on the slab rate applicable for me. So we will get the tax rate based on the slabs we have, and based on the status if we are falling under, and based on the other criteria whether it is ordinary or preference slab. We will get all those calculation. We will arrive at tax rate. That tax rate we will apply it on the taxable income and get the tax payable amount. So this tax calculation and how to arrive the tax rate, that is a separate lecture. So we will get that in the next classes. So now the thing is taxable income. Out of that, we are going to arrive at tax payable amount. Is there any amount can be less from the tax payable? Yes. So the other one I am going to write. from the tax payable I can take some credits. I can take some credits. I'm writing it here. Tax credits, that is possible based on the criteria mentioned for the deduction related to children education or anything we can get based on that tax credit. We can, like, if your tax payable is 1000, if you paid something for the tax credit as a 10, you can directly deduct the 10 rupees from this 1000. So once we make the deduction for tax credit, we can we can add other taxes. Similar to income tax, here surcharges or other taxes. Instead of that, we will be having here other taxes. That other taxes we will be having is social security tax, municipal corporation tax. So that way we will have, it's similar to our surcharge. Once we arrive at taxable, we have to add that surcharge amount. That surcharge is nothing but here social security tax as well as municipal corporation tax. From that, whatever we already paid as part of, per suppose if you say if you are a salaried person, you would, the TDS already deducted at the time of payment itself. That can be taken as a deduction here. Or else if you paid any withholding tax, all those things you can take it here. Withholding tax or taxes already paid can be taken as a deduction, can be taken as a deduction, tax paid. So first we have the format is very important, so that's why I'm reiterating. So you have to remember that format. Once you arrive at tax payable, you have to take tax credit, first deduction. Thereafter, you need to add the other taxes. Then you can take the final amount, which it is comes as tax payable. So from that, you need to reduce what is already paid, similar to income tax. And then you will arrive at refund or tax payable situation. You need to make a payment of it or apply for the claim of the refund. So this is completely, this is the structure we are going to have for the form 1040. Very simple, straightforward form. You just have to memorize the structure. It will help for our calculation in future. Okay. Now, I am going to the next topic, filing status. Before that, anyone has any doubt on it, please ask me. You can ping me in the comments as well. I can respond back. Okay. So now we know about the Form 1040, Form 1040 structure. Now I am going to the filing status. This filing status, why it is important, that I will explain now. So same as in India, income tax, first we have to arrive the individual person, what is his status. So that may be like, if a person is falling under senior citizen, the tax slabs are different. If a person is falling under uh, child or minor or major, from there also tax slabs will be different. So the same way in US we are going to define filing status. From that we will differentiate the tax slabs and tax deductions as well as whatever tax credits we are going to get. All this depends on the filing status. How many filing status we have in US? Five. There are five filing status we have. First one is single. Single filing status. It's not based on the age. I'm just given income tax as a reference. Here it's completely on the marital status as well as the dependents on you. How many people are dependent? So based on the different uh, criteria, here we are going to define the filing status. It's not at all based on the aging criteria. Okay. So the first status is single, second status is MFJ, third status is MFS, fourth one surviving spouse, fifth one HOH. These are five filing status. We have it in US. So first one I'm not going to cover, because if any person not falls under the below category, we should treat him as a single. There is no separate criteria or condition to be filled in for the single. So the simple rule is, if a person is not falling under below any of the category, we can treat him as a single, and the status, he arrive at single, and the same way he will get the tax slabs, tax deductions and tax credits based on those conditions. So this point is clear. So first single is very simple. You can no need to make any note of it. So now I am moving to the second and third criteria, which is MFJ or MFS. The full form of MFJ is married filing jointly, married filing separately. This is the full form of MFJ and MFS. From the nomic nature itself, we will come to know this is completely related to a married person. So, if a person is married, then the status for him is going to be MFJ or MFS. He can choose based on the criteria. So, basically, he should choose MFJ only. If the case is they filed for the any separation or something, then they may go for MFS. First I will cover it off MFJ. So I will brief about MFJ first. So married filing jointly, so that means that particular taxpayer should be married, then he get the status of MFJ. That is first simple criteria. How do you know at what time, at what date to be considered whether he is a married or not? That is simple question, because on which day we have to take the marital status is the main judgment to derive at MFJ statement. So the date is 31st December. In US the tax year is going to be calendar year. There is no separate financial year like April to March. Here the calendar year is going to be treated as a tax year. So in that, for that tax year, 31st December, that means end of the tax year, what is the marital status will define MFJ status for the calculation. So, if a person got married on 31st December, what is the filing he has to take? MFJ. Even for one particular day, he is eligible for that MFJ condition. Okay, this is very simple. You have to remember 31st December to identify the marital status. So, this is main point. Per suppose someone got married, they applied for the divorce. In that case, can we treat him as a married person? Again, you have to go and check on the condition. The condition is on 31st December, did he get the approval for the divorce, or did he got the legally separated confirmation by the law? If yes, then he should not file MFJ, because he already got divorced or legally separated. Confirmation is received on the particular 31st December. So he is not eligible for MFJ. But he applied it. There is a court. The discussions are still going on 31st December. Then he should still consider it as MFJ. Otherwise, he can apply for MFS separately. MFJ or MFS, he can file in that case. So, even in the diverse situation or legally separated situation, we have to take 31st December the status. Okay. This is very simple scenario. There are You have to remember the status how to arrive. Based on this condition, they are going to ask more MCQs. So that's why I'm reiterating. If anyone has doubts, you can ask me now itself. Okay. So MFJ we will get on the 31st December, and if someone is applied for the divorce or staying apart for the complete tax year, but they did not get the um, confirmation from the court or any other law, they can file the MFS, marriage filing separately. So that is the only thing you can differentiate from MFJ and MFS. And there are multiple different conditions also that leads to MFS that we will discuss later. Basically, if someone is a married, then they have to choose MFJs. If there are separate criteria or situation that arrives to them to make separately returns, then they can go for the MFS. This alone you just have to remember. Okay, I am giving you one scenario. Married filing jointly, that means here we have to combine spouse incomes and apply for the return. So in suppose if a person like husband is choosing accounting basis as cash, and wife is using account basis as accrual, in that case, can we combine their income and jointly file the return MFJ? Is it so possible? Yes, that is possible. So the thing, what is which accounting policy they are using, that is not a that is not a uh, criteria. So we can combine accounting policy. They can choose anything, cash or accrual. Okay, or they can choose accounting years as different. No, that is not possible. Accounting year they can't choose differently. Accounting year can't be choose differently. These are the main key points related to MFJ. How to arrive MFJ condition is on the date of last date of tax year. What is the marital status of that person in define MFJ or MFS? Okay. Now we covered about MFJ and slightly covered about MFS as well. There are the different situations that leads to MFS, but the basic point of defining whether he is a married individual or not, that still remains the same for MFS. Okay, so now we covered these both category. If anyone has doubts, you can just let me know. Okay, so apart MFJ and MFS, now I am moving on to the surviving spouse. Okay, now before going to surviving spouse, the main criteria to fill for the surviving spouse is something like someone died, like one of spouse is died, then the other person, what is the status we have to define, that is going to be under surviving spouse. Okay, basically the death of the spouse will trigger to the surviving spouse. This is first criteria. Okay, that will choose on to the surviving spouse. If a person died, then automatically did he get this surviving spouse benefit? No, that spouse should have a child. Then only we will call that person as a surviving spouse. Okay, this is main criteria. Okay, they, if the child is there, there is one more criteria. It's not just that one child is there and the spouse we can get the surviving spouse status. It is not just like that. There are one more condition, that child, whatever expenditure for the child, that should be borne by surviving spouse more than 50%, then only he will get the status So that means more than 50% expenditure of child should bore by taxpayer, then he is eligible for the surviving spouse status. The and the child should be with surviving spouse, like whoever is taking care, he should be there along, he should stay along with the spouse for the whole year. There are for the complete year, it's like 100% the child should stay with the spouse, then only he will get the benefit. If he is staying at some other different location and you are providing 100% expenditure support or 100% well-being of that person, is not eligible. So you have to make a note of all these conditions to define whether it is a surviving spouse or not. So the child should stay with the spouse for the whole year. Whole year means the tax year, the complete tax year. He should stay whole year. Temporary absence is fine. Temporary absence is fine. So that means child may go on vacations, or as per the his education he has to travel for different locations, then that is also fine. It's basically the intention, or the thing is here, the child to stay with the spouse with the temporary absence is fine for the education, or else any vacations if he goes for the outside the city, that is permitted. Okay, now I'm going to define child. So, who are the child? We will call it under surviving spouse. So, the child can be biological, the first one, biological, or step child, or adopted. But which is not included is foster child. Foster child means we will get the right to grow that person, but he will not be as per the records or something, he will not be our child. So that's why we are not going to include foster child. We will not get any right on the child or something. We will provide 100% of support, and we will take care of him, but we don't have the right to. So in that case, we will call it as foster child. So that foster child is not included in surviving spouse. This is the main one. Okay. We were going to discuss many MCQs based on all these status. So you will come to know each conditions with more specific details. So you don't worry, you just have to remember what are the conditions I am telling it now, so that you can apply when we are going through MCQs one by one. So to qualify someone as surviving spouse, these three conditions should be satisfied. All three conditions should be satisfied. That is the one which is child, second one is expenditure should be 50% expenditure should be borne by the TP. And the third one, the whole year the child should stay with the spouse. So this is the point we have to make it. And the child means we can take everyone, biological, step child, or adopted, but not the foster. That is the main point. Okay. Once you satisfy all these condition, how we are going to get that surviving spouse benefit and how we are going to do that, I will tell you now. Okay. So, for suppose 2021, 2022, and 2020. These are three tax years, and spouse got died in September 2021. Okay. So, in September 2021, I have a child, the person have a child, and we are taking care of 50%, and the whole year he stayed with them. Will he attracts surviving spouse condition? Yes. In that case, the particular on the date of death, which financial year it falls, that is going to be MFJ only. The next particular 2 years, it going to be part of SS. That means surviving spouse. So this point little bit tricky. Please carefully listen. Please carefully listen. This point is very tricky. So Once I satisfy all the condition for the surviving spouse, that is going to apply only on the next 2 years, not on the year which actual death takes place. That actual death takes place, we are going to apply the same MFJ condition because he is a married individual on the date of death. So he can apply for MFJ or MFS based on the different criteria. That is fine. But the thing is, on that particular year, we are going to get MFJ as the status, not the SS. The next particular 2 years falls under surviving spouse condition. This is very tricky. Please, if anyone has doubts, raise it. I will clarify once again. Okay. Okay. I know these conditions are very. Once you listen, you will not remember. You just have to rephrase it and make some tables and see so that you will come to know. Okay. Now, surviving spouse we cleared. Now I am moving on to the next criteria. So you can see we covered four criteria, four filing status. Now I am moving on to the HOH. Okay. So I am reiterating one thing. In surviving spouse, MFJ, MFS, the individual should be married. In that case, these three status are going to be applied. If someone is not married or considered to be married, in that case, HOH status is going to come. That is the main criteria. Okay. So I am writing here married, unmarried, or considered to be unmarried. Okay. This we will make it as HOH condition. Okay. You know about the unmarried, that everyone know unmarried. What is this considered to be unmarried? That means a person got married, but he applied for the divorce and he got it. So in that case, he will not fall under the above category, right? If person got the divorce on the date of on the last day of tax year, then he will not got the status of MFJ or MFS or surviving spouse. That is clear from here. Then what status he is going to get? He is going to get HOH, or else if HOH other conditions are not satisfied, he will go on to the single status. So for the single or HOH, the main criteria will come it as unmarried or considered to be unmarried. So you can make it as some people who are legally separated, their status is going to be HOH or single. The same way, if normal unmarried person, they are going to get give it as HOH or S single. So in HOH, there are multiple other conditions as well. So if all three conditions satisfy, he falls under HOH, otherwise single. Now, second point, HOH, he should be borne 50% expenditure of the home maintenance. So then we will call it as head of house. Okay. So more than 50% of expenditure of home maintenance should borne by taxpayer. So in that case, we will make it as head of the home, head of the household. The abbreviation is HOH is head of the household. He should borne 50% expenditure of home. Then we will call it as head. Okay. That 50% expenditure to be paid for the qualified persons, then only we can make call it as not for like whoever staying in the home and for them he just paying the 50%, he will not allow. Only that expenditure should be used for the purpose of qualified person. Then only we will treat him as a HOH who are qualified person, that we will discuss later. Now the main three conditions are here. One is he should be unmarried or considered to be unmarried. He should born 50% of home expenditure. Third one is for the qualified persons, then he can be treated as HOH. Okay. So coming to the qualified person, who are qualified person? We will discuss here. Who is qualified person? Qualified child. The qualified child is a qualified person. Child here represents same biological step adapter. Here includes foster as well. Foster child also eligible for qualified person. That is one thing. Child, then parents. Okay, relatives. All we will make it as all the three persons we will call it as qualified person. If person is spending money on them for the home maintenance above 50%, then he is the head of the household. So the condition of residence, is it available here? Yes. The fourth condition is all these persons who he is taking care of should be in home for more than 6 months, not 12 months complete. But in surviving spouse, the child should stay with a spouse for the entire year. But if here 6 months, if someone is staying, that is fine. But for the parents, this condition is not applicable, because as you already know, in US no one is going to stay together with the family. So there are they can stay, parents can stay in orphanage or some different next to house or something, that is fine. They know the thing, so that's why they give an exception for the parents. But if you are maintaining for the child or relatives, those persons should stay with you for more than 6 months. This is more than 6 months. Okay, this is HOH condition. So now we covered all four criterias related to filing status. If anything is not falls under, directly that person status is going to be single, as I covered in the first point. So anyone has any doubts? So out of these, you could see MFJ and MFS is straightforward. You can get that status and the marital, and you can decide whether it is MFJ or MFJ. Only for the surviving spouse and HOH, we have specific conditions. So those conditions I have listed out in a table format. Here you can make a note of it. For your revision, you can go through this table that will help you. So I hope I covered filing status completely in this lecture, as well as the form 1050. What is the format I covered now? Any doubts, please let me know. I will copy the table which we can be used for the surviving spouse as well as HOH easily, the criteria and conditions. Based on this, we are going to address many MCQs in later. So please go through it and come back. Thank you, everyone. Thank you for joining the call. We will meet in the next session. Thank you.